Hello, investor and trader. Welcome back to an episode. So, DocuSign just released their numbers Q3 2021, and the stock plunged more than 30% upon this recording. Is it a buying opportunity? I don't cut to the chase. As an investor, it depends how you look at it. As a trader, absolutely going to trade this, right? I'm going to explain my justification right now. But before I get started, I'd like to disclaim I'm not a financial advisor or a stock guru. I'm just a random guy on YouTube who loves to trade stocks and invest in the stock market. So let's get straight into it. So it plunged heavy. I love to catch a falling knife, but when I see this right here, no. Why? It just high DocuSign fundamentally it has a high, like sky high evaluation. What I mean by that is this right here. If you look at the metric, just a top view, like a top view of the company, and you can see forward PE, PS, PB, PC. All these numbers here are ridiculously high for me. Now notice this is when it was right here. Can you imagine the numbers up here? Even more crazy, right? So as for me as an investor, I don't want to take that chance. Like I said, I trade like a chicken and I also invest like a chicken. That's how I've managed to survive 5 years plus in the market because I go the safe route. I don't take high risk. And again, for those like high risk, high reward, maybe this stock is for you. So they released the numbers. It looks like the number did okay, right? I mean, 42% year over year growth for revenue wise. That's pretty damn good. That's more growth than Facebook. But you have to ask yourself, why does stock plunge so much? Is it because of this right here that they announced? Because of future guidance for the next quarter. So DocuSign forecast revenue 560 million for the next quarter versus analysts expected 575. So $15 million short. Does that justify a 30% plunge? I don't know. It's just depends how you look at it, right? They assuming that the growth has slowed down because people are going back to work and stuff like that. All the pandemic stocks, but let's dig a little bit more into it than just that in terms of evaluation. So around July 29th, the end of July, I made this post for my private group. I said company with super high evaluation, higher than Apple at that time, DocuSign, Square, Now, DD, Teledoc, Tesla, Peloton, PDD, Pinterest, and Zoom. About 10 stocks that are listed here. These stocks are high risk, high reward. And I said I would not invest in any of them. However, I would trade them. So let me go some example since I made this post. And I hardly make any post on my groups because I don't like because basically what I'm trying to warn my friends and family that hey man, these stocks are extremely high evaluation right now, regardless what YouTubers are talking about because YouTuber love to make video with high views. Notice the stock all I mentioned right here. All these are high, pretty much millennial stocks or high flying stocks. And I do not like to talk about these stocks, but I have to address this. So DDD, oh, DD right IPO recently. Now they're gonna be delisted or whatever. But upon that, I make this post at the end of July, right, July 29. DD was priced somewhere right here. Now it's down 22%. In fact, it probably go even lower due to delisting. So that's the first example. The next example, let's go Now. Same thing for Now. Now, I don't know, somehow Now is still going higher. Evaluation for Now is ridiculous, for my honest opinion. But it's up 7% ever since I said that. PDD. When I made that same thing in a post, PDD tanked 40%. What else do we have here? Pinterest. When I made that post, it was right here in the 80s. I don't know what these people are thinking. Evaluation wise, it's overpriced. Even right now at this price right now. Now you may argue again. It's just my honest opinion. Okay, you can argue that it might be underpriced. For me, it's still overvalued. So down 52% ever since I made that warning sign for my friends and family. Check out Peloton. Same thing around this prime. The stock tanked 63%. Huge gap right here. High flying stock, right? What come up must go down fast. Next one, Square. Square is still holding up pretty good. It's only down 28%. So same thing. I made the warning sign right here. Now Square is right here. Teledoc. Same thing right here. Now it's down here. 36% tank. So I hope you guys see the picture here. Like what they have in common, right? Zoom. Same thing. When I made the warning sign, now it's down to here, down 40%. The only two stock that did pretty okay was Now and Tesla. Tesla is unique because I call this a cult stock because of Elon Musk. Other than that, this stock right here is extremely inflated. Now you can I don't know how to say, but you can argue against that or forward to that. But as for me, this stock is extremely overpriced. There's a gap right here that needs to be filled eventually. Who knows when it'll be filled? Who knows? Maybe go even higher, right? Squeeze the shit out of all those short sellers. Again, for me, this is a cult stock. It does not in line with the fundamentals at all. That's why a lot of professional investors like Michael Burry or other short sellers that try to short this up by put option are getting hammered, getting smashed because it keep going up. I would not short this stock or touch this stock. I would definitely trade this stock because if you look at the dot-com bubble, a lot of the dot-com bubble stock kind of resemble Tesla if you do your history of the stock market. So at the bottom line, Teledoc. Notice the Teledoc tank, and you guys know me, right? I love to catch the following night. I was watching this since the market tank, and I haven't made a move yet because it's just high evaluation. I totally understood why it tanked so much, based on it has high evaluation. That's the bottom line. So now it's at 165. Why, as a trader or an investor, you need to ask yourself, why the hell the stock stops at 165 after the drop? Well, it's very simple. Let's go to the daily real quick. Notice the daily here is all below the key level moving averages, right? Okay, next step, zoom out to the weekly, right? Aha, right there, see? Simple, right? So it lands right on the 150 weekly EMA. So it's holding right now as of right now, but the level I was watching was right here earlier when I messaged my group that watched the 180 level, 190. It looked like we just bust through it because these are the support right here for almost a year and a half right here, but it broke below. So now this level right here is going to act as a resistance. So for tomorrow, the stock can either stays around here or going to try to bounce, retest this, and try to break back above it, or just continue to the downside, or bounce here and then get rejected. But eventually, this is a big gap. It's a 30% gap. Most gaps are like to fill in the gap eventually. We just don't know when. Maybe toward next quarter. Sometimes the gap takes a while to get filled. Maybe like a year or 2 year out to get filled because there are several gaps that other stocks are not being filled yet. So example like Zoom, for instance, you can go to the daily to see the gap because weekly you're not going to see it. So there's a gap right here that has not been filled. So it just really depends, for those that trade gaps. So the next stock is Teledoc. There's a gap right here. And there's a gap right here. Let me zoom in to see the gap. And this gap, I don't know when it's going to get filled because the price is still pretty far away. It's like 270. Right now the stock price is at 96. It's like almost 1/3 got cut off. 60% plus tank. So in the end, it's just how you see it. As for me, I would probably going to stay away because I did make a video about this right here on first major red days right here on earnings day. So basically what I'm trying to say here is wait for tomorrow the whole entire day. Do not trade this stock. If you want to approach the chicken way, like my way, like I trade like a chicken, so I would definitely wait just to see what kind of candle it forms. Is it going to form a solid red or a pin bar or something like that? Then I have an idea, okay, investors or buyer are stepping in. Because if it's a solid red, Oh boy, this thing can go a lot low. If you notice here, we don't have a clear support all the way down here. Well, after this right here, I guess you can say right here and right here. Because all this right here, if you look at this right here, it just kept going up and up and up, during the pandemic right here. There's no, like couple, see how it tests a couple of times right here, and then it finally breaks out. This right here just constantly going up. That means it's just constantly gonna break down, just like right here for this is a stock that's very popular. Let me rethink. Recently, just took a huge dive. Fastly, there we go. Fastly, there we go. Right here, Fastly, very similar breakdown. This support broke. Next support is right here, and then ultimately right here in the 30s. I did made back in during one of the chat app with Yahoo Finance. I did say around 30% if I can find the hold on, let me try to find it real quick. Okay, sorry about that. I just pull up this over here. So this is my message what I post in one of those Yahoo Finance chatting app, whatever. Apparently some people don't like this comment, but this is what I wrote to them. There's a reason why Fastly bust through the 50 moving average. 50s, sorry, 50s. Talking about when I made this was 30 weeks ago. So this was around May. So where's May at? Right here. During Q1 earning when this big ass tank right here. So this is what I said. There's a reason why Fastly bust through the 50 like butter. It has no support as it bust through the massive run up for spring 2020. The next key level of support could be around 30, 35 or even in the 20s. There's a lot of short squeeze interest. So, and I did say right here, right? We could visit 35 or 20 by Q2 earnings. Q2 earnings is right here. And guess where that price is at? Around 35 right now, you see? Why? It's a simple technical analysis, guys. Once it break through this level right here, and then right here, you see that? And then the next one I see is, well, the 20 is right here coming up, see? Sorry, the 35. And ultimately, the worst one is right here. It's very simple. It just support and resistance. That's all it is. See? Couldn't break it. Couldn't break it. Break above it. Massive run up right here. See, this is what I'm talking about, like DocuSign. It has like no, I would say ceiling or resistance. It just busts through it. Well, what busts through it must come back down. You see what I mean? So there it is right here, 36. Just as I projected right here as I posted 30 weeks ago on Fastly. For me, don't have to worry about this because I already sold out during this massive fall right here. I was a Fastly shareholder, but I did buy some right here and I sold around 64, 63 right here during the pop because I understood higher high. Just based on technical. So I'm out of Fastly right now. In fact, I made a profit right here. So this and then I haven't bought Fastly ever since. It's like again, it's one of those Corona stocks, I probably buy it, and now I'm not investing in it, but if I do trade, I will definitely gonna wait until around maybe the 20th. I know eventually it's gonna break. If next quarter they release numbers that miss Wall Street expectation, this can definitely plunge them to 20, just as I expect here, just as I wrote here. And again, you have to be very, very patient. Just have to wait. Just like me catching a falling knife, right? I will watch this and watch and watch and watch. Eventually, I'll make a move. Same thing when it comes to this kind of trading. Now, if I do make a trade for fast, now I know I'm jumping all over the place, but right here, for me, small position if I decide to buy around 35 range because I know eventually this may break down to the 20. Same for DocuSign. Right now it's holding right here, but if this price break, I can see it go down to here. What price is this? 90 or 100. Now you're probably thinking, oh my god, I don't know about that. Well, we will see. I'm not a psychic either. I'm just just based on my technical analysis. If this cannot hold, this is the next visit right here. Kind of like Teledoc, like no one expect this to happen, right? But guess what? It does happen. Where it just breaks through all these levels. The next one I see, this one right here, is somewhere right here in the 90s or 80s right here. It's almost there, so pretty close. All right, hopefully you guys like this little technical analysis, some of the fundamentals and stuff like that for DocuSign. So see you guys in the next video. Bye, and good luck on your investments.